Hello guys, welcome back to our YouTube channel.
In this video, we'll be talking about trade management and the importance of it. And we're going to show live examples last week on how we managed our trades using trade management.
But before we get into the video, make sure you like, subscribe to the channel, and then once you watch the video, leave a comment in the comment section below, letting us know how it went.
So let's get into it. Before we get into the video, we wanted to touch on a bit about trade management and the importance of it.
So when you place a trade, it is important to monitor it for management purposes, not emotional purposes. Whether this is to trail your stop loss or to exit the trade early, trade management is a vital part of successful trading.
The reason why trade management is important because it allows you to take profit from the market, even though the trade might originally be a losing trade. It also protects our capital and it helps with mindset as we know that the trade is going to bank profit. It allows us to let the trade run and not overthink and try to get out early.
Yeah, so what we're going to do is we're going to show you a couple examples on the live charts of how we've actually managed our trades last week. Okay, guys, so this is GBPUSD. We're going to run through an example of a trade that we took last week on this and actually how we managed it throughout. So we'll talk a little bit about the analysis behind it and the structure of the market and the reasoning for the entries and everything like that. So as you can see, this market is uptrending. We are in bullish market structure. So in the longer term, price is heading up. So in terms of like swing trading and longer term trading, we should only really be looking for buy positions. However, on the smaller time frames, such as 1 hour, 15 minute, anything under there, we can look to scale into some smaller time frame sell positions. And that's what we actually try to do on this one. So you can see with this this pair, we are just uptrending, making higher highs and higher lows. And whenever price is trying to break out to the downside, you can see it just continues to the upside. Now, you can see we have this support level here, price pushed through it, then just continue to the upside. You can see this, we have a support level in the market here. Price tried to push to the downside, and all that did was just continue to the upside. So price is heavily uptrending, and that's important to note with this. However, looking at the market structure most previously, where we actually tried to catch our position, what we had was a big impulsive move through this ranging market. You can see prices ranging between resistance and support. Price finally broke out impulsively to the upside. Now, what we was expecting from here was for price to pull back before continuing to the upside. So what we was trying to do was trying to catch some sell positions on this pullback on the lower time frames. And where we was predicting for price to pull back to was if we put our Fibonacci from swing low to swing high, you can see that previous level of resistance here does line up with the 38.2%. Some people might say, why have you drawn the Fibonacci from down here and not here? Well, if that was the case, we can draw it from this one, and we can see that the 61.8 also lines up with this level of resistance. So either way, this level in the market is looking like the strongest place for price to pull back to. So that's where we can look to target and expect to catch sell positions down to. So where did we actually look to start taking our sell positions? Because we're not just going to start selling randomly at the top, predicting price to come down. We need to add together some confluences for us to do so. And this is where we saw our sell position. So if I jump down to the 1 hour time frame. Okay, yeah, so this is the 1 hour time frame now. So what we can see price is doing is clearly uptrending. We highlight the higher lows in this. You can see the price is respecting this trend line. However, once we reach this resistance level here, you can see price is struggling to make higher highs within the market. So sellers are clearly trying to step in. Now, we're not trying to enter right at the top because we are still uptrending. So what we're waiting is for a structure shift to happen. So we're waiting for sellers to clearly step into the market, and then we can look to catch a sell position down. So this is just early signs. We're waiting for a structure shift. And where we saw that was on the 15-minute time frame. If I jump it down to the 15, you can see that price was using this level here as support, and then price finally broke through here, and this was our confirmation of a shift in market structure. And then we allowed for price to pull back, and then that's when we was looking to take our sell position. So how did we actually take our sell position? Let's talk about it. So we clearly had this previous level of support that we used as resistance, but where did we actually take our position? So if we draw from our Fibonacci from swing high to swing low, from here to here, this wick, we can see that price actually wicked the 61.8% to perfection. You can see that we wicked it from there. And you can see earlier, previous sellers are probably getting into the market too early here. So all this was doing, this isn't where the orders were. Price had come up to grab orders at the 61.8. So that was our trigger to get into the market. Where we actually got in, if I mark up, we got in at 1.37952 with a stop loss 1.38152, like this. So we had a 20 pip stop loss, putting our stops above the 78.6 Fibonacci. We got in a little bit late after this 15-minute candle had closed, but of course we are targeting down here. So it's looking like a 1 to 2.5 risk reward. Remember, this is like a day trade, so we're trying to secure as much profit as we can on the way down. But how did we actually manage this trade? This is the most important part of this video, is how did we actually manage this trade once we entered? Now, let's have a look how price actually reacted to start with. So you can see as soon as we entered, price moved into profit, breaking the lows. So from this moment on, where price has broken this low point here, we've broken through the bottom. This is looking like the trade should continue down to take profit. However, because we're running currently at around 1%, just under, about 1%, we don't want to see this now turn into a loss. So we're running 1%, price is broken through support. We don't want to now see this turn into a minus 1% loss. So what did we do? We moved our stop loss to break even, protecting our capital. And what this does is it prevents it from being a losing trade. So if we get out at break even, that's it. We leave the trade and we let it do its thing. So what happens next? Now we've moved our stop loss to break even. Let's have a look. Okay. As you can see, price pulls back and does actually stop us out at break even. Now, what happens there, and this is where emotions can come into play, is you can see price stopped us out at break even and then formed a massive wick to the upside and then a couple more bearish engulfing candles. Now, what this is potentially doing is tricking people into re-entering the market for sell positions. So if we just get rid of our position, so we're out at break even now. Now, what this is doing is potentially tricking people into entering again. And this is where emotion can kick in. And it's the fear of missing out, the fear of not being in this trade. People are entering this trade with stops, maybe even in the same position above there, trying to target down here because they're thinking, oh no, I've been stopped out of this trade. I want to be in it. So they enter this market. They might even enter after this bearish engulfing candle because they think price is going to go down. And then let's see what happens. From there on, you can see price just continues to the upside. So this is important. This is the importance of trade management, is you're managing your trade, you're managing your risk, you're protecting your capital. And just because you get stopped out at break even, this doesn't mean to re-enter a trade. You put your stop loss to break even for a reason, to be out of this trade, because if you otherwise you wouldn't have moved it to break even. So this is just an example of how trade management is key. So for one, if we didn't move our stop loss on our first trade to break even, this would have ended up being a loss. So we actually managed to prevent a loss by doing so. And also another key thing to point is we didn't actually re-enter the trade. If we re-entered the trade again out of the fear of missing out, which is a key component of unsuccessful trading, is entering off the fear of missing out. You can see that this trade, if we did enter again, would have been another loss. So yeah, this is basically GBPUSD and how we manage this trade.
Right, guys, I'll be talking about CFDs, a sell position we took last week. Just going to do some top-down analysis on it, starting from the top all the way down, and how we actually found that position. So we're on a weekly chart now. As you can see, price is looking like it's actually in bullish market structure. We can see it found support here at psychological level 107, and ever since then we've just been moving bullish, moving to the upside. However, looking here, we can see that price has reached some sort of resistance with lots of wicks to the upside. And when you zoom in a bit on the smaller time frames as well, you can see that we're almost in a range. So if I jump on the daily, yeah, we can see the range that we're in. Now, you can see the support underneath here, and we can see the resistance above here. So what we were trying to do, we're trying to trade it to the bottom of the daily resistance as such. So let's jump on the smaller time frames once again and try to pinpoint that position. So let's jump on the 4 hour. Yeah, so the 4 hour, we can see a lot more market structure. So what can we see? Well, what we first potentially saw is a potential head and shoulders pattern as well. We'll see here we've got the left shoulder, head right here where price pushed to the upside and then came straight back down. We found some support here where we thought a potential neckline, and we're looking at this at the right shoulder. So what we're trying to do, we're trying to scale in here, trying to find a little day trade back down to this region and potentially even look for that long-term buy bias, which we are in because we are uptrending. So yeah, let's go down one more time frame, looking on the 1 hour. So yeah, what can we see? So we can see that price made this falling wedge into this area of support where we thought was the neckline, and we just thought this was the biggest impulsive move. This was the correction, and then we're looking at the continuation back down. We can see here that we had this area here, which we were targeting because we didn't want to target all the way down here because we are day trading this. So we want to try to find the area where price can reverse on us the most. So we had this as our as like short-term target, but we wasn't targeting the bottom just in case price wants to reverse a bit earlier. So the actual technicals behind it, how we enter the trade. So let's jump on the 15. We can see where we're coming into this area of resistance. You can see across here, it's very well respected. That was almost in a rising wedge where price was squeezing. You can see here that price was just squeezing in around this level. And not to be seen, we saw an impulsive move away from here. So that impulsive move gave us that confidence, that confirmation that price is broken and moving away from this resistance, breaking out of the corrective pattern, which was the rising wedge. And now we'll wait for that retest to then see further continuation to the downside. Now, if I draw in our Fibonacci from swing high to all the way to swing low, we can see that we're also coming up to the 61.8 Fibonacci level, which is exactly what we want to target as it comes nicely with the retest of the rising wedge. Boom. So that was, as you can see here, this was our entry here. Right, guys. So yeah, we entered on the retest of the correction pattern. Our stops were above the highs. So let's see how this trade developed and how we manage the trade. So yeah, let's play it. Boom, play it on. Right. So when price impulsed to the downside, like so, our first initial instinct was to move trade to break even. So we're protecting our capital and making sure that this trade is not going to lose because anything can happen. Price can reverse from here and can stop us out. So boom, straight away, stop loss to break even. Now we let the trade develop a bit more. We started seeing that some sort of support was being used here. So let the trade develop a bit more. Boom. Once we see this spike to the upside, we thought, oh, maybe that this level was using as resistance. And we might see that further continuation to the downside where we actually break this support. So what we did was we moved our stop loss just above this wick into 0.5% profit. Therefore, we allowed the trade to run. And we now mentally and in our mindset, we're thinking, we're going to bank profit on this trade. So we're happy to leave it. So that's what we did. So now we know on ourselves, we don't have to watch this trade. We're going to be in 0.5% until we break these lows. That's when we can have to manage the trade again. So let's let the trade develop once more again. Boom. What do we see? Boom. We can see price stopped us out at 0.5%, which is fine. We're happy because we got to let the trades run sometimes. If our target's down here and we're thinking it's going to come down here, we just let the trade run. We know we're banking profit and so on and so on. So yeah, that's where we use trade management here to come out at 0.5%. And as you can see, if I just play it on a bit further, it was worth it because price ends up smashing through, would have smashed through our stop loss and actually moves to the upside from here. Boom, there we go. So yeah, this is why trade management is so important. Banking those little percentages and allowing your trade to run so you might be able to get a bit more out of the trade. So yeah, this is Chef JPY on how we use trade management to manage our trade.
Okay, guys, so thanks for watching and we hope you took something away from this video.
If you want to get involved with us, all the links are in the description below, or just give us a DM on Instagram.